SPY. And let me take a look at this price action first. Yeah, let's do let's talk about this report, the price action report. Because I think we're going to be making some updates here, so I just wanted to review it. And right now we talked about the pre-market activity. These are actual trades happening in pre-market. So we're over here, right? This is an SPY. This is the VWAP price, the total dollar value of stock that traded. And this is the relative value, which we compare to the 30-day average, right? So if we look at the 30-day average, we could see that it's usually $743 million worth of stock traded per day. So we're a little bit below that. This also just lets us compare the most current 30 days versus the previous 30 days just to see how things are trending. Okay, so these are like comparing month to month, how rolling 30 days comparing to the last 30 days. And we see that if we did it here in SPY, that the dollar value of the stocks trading in the pre-market hours has increased relative to the previous 30 days, and could be more volatility, could be due to events happening around, or just, seasonal trends. But so far, pre-market looks like volume in the pre-market's up 35% month over month. Then we have this other session here. We're not in there yet. This is the opening cross. Let me just see this. If you open, okay, so we're not here yet. I'm going to cover that later. Then we have this opening cross. And the opening cross that's the first trade of the regular hours. Okay. And the way the opening cross works is that there are right now orders that are being entered in that are not eligible to trade in the pre-market hours. Okay, so right now you have buy and sell orders that are getting accumulated on the specialist book, but either they're not approved for pre-market trading, or they don't want to designate it to trade in the pre-market hours. It could be in institutions that can't trade in the pre-market hours, so they could only trade during regular hours. But these orders right now are being accumulated on the specialist book, and then the specialist takes those buy and sell orders and decides where's the best place that they all match up, or the most of them that match up, and it's like a single price auction. Okay, so it's not, so that's like there are a few sessions that are single price auctions, and the opening cross is one of them. And there could be, if there are more buy orders, then obviously it could push the prices up to the point where they match up. So you have market orders, limit orders, and so forth. So that's the opening cross. And here, so far, what we're seeing is that we didn't open today yet, right? So there's no data for it. But we see that in the last 30 days, the dollar value, the average dollar value of the opening cross is down 5%. So that's a little bit different than the pre-market, right? And here, what we're seeing is, yes, that the pre-market activity really did tick up pretty significantly. So there is more going on now in a pre-market. But we could just see over here that the volume or the dollar value of the volume did not increase proportionally across the board. Right. So just looking at this, I'm looking at all these. The pre-market definitely, had a bigger uptick, a lot more trading going on than the prior month. Opening cross was down 5%. All right. Now, before I move on, I'm going to just click on this and say, well, what about these last 2 minutes, right, before the opening cross? So this is 2 minutes before. This is 1 minute before. Okay. And, in a pre-market, you're going to have a few different things going on. One is that you're going to have, people trading based on news or trying doing different things. Mostly it's news driven, right? But there's liquidity. There's maybe some strategies that are going on in the pre-market hours, and sometimes those pre-market trades are trying to trade early, right? Because they think that maybe they're getting a better price before the market opens, or they could anticipate the market open. But that's happening. The pre-market trading, I think, starts at 4 a.m., but really usually starts kicking in around 7 a.m. That correlates to the news cycle. So between 4 and 7, you don't see that much activity usually. Let's just take a look at the pre-market. If I could see a chart here. Here's a VWAP chart. So you could see here kind of like, this one started 6 a.m. So you could see very little and then started kind of coming up here. So usually at 7 a.m., more volume kicks in. And that is usually when the press releases and news cycles start to, get released. So let's go back to these sessions.
ED?
Yeah.
Rob did have a question. He asked, is there a way to calculate the implied moves prior to the next day after closing of the market, or does the final implied volatility indicate that somewhat? I could always copy that and you can answer that tomorrow, not to get you off course. But
yeah, let me go. Yeah, because I gotta.
I'll send that. I'll send that.
Okay.
Cool. Thanks for the question, Rob.
Yeah, thanks, Rob. So that's so with the pre-market, you usually see also an uptick or some activity right before the open. All right, so like 2 minutes before, 1 minute before, we could see a little bit of an uptick, and so over here, this is within the pre-market, 2 minutes before, 1 minute before that we're logging, and that could be a strategy where it's anticipating the opening cross, right? So there are strategies that are subscribing to see what are the imbalances and indications of that opening cross. And if that's your strategy, what are you going to do? You're not going to start at 7 a.m. or 8 a.m., right? You're a trader. You're going to try to get it as close to that opening cross. So those are typically strategies that are doing right before the opening cross. If they could anticipate perhaps where that cross, where it's going to open, it's opening higher, lower, you'll see some pickup in that activity. So I'm going to close that for now. So after the opening cross, we get into these regular hours, right? And these are regular hours traders. So far, we're not open. We're just looking at the 30-day averages. And regular hours is right after the open, from 9:30 to 4 o'clock. I think in SPY it's to 4:15. Those are regular hours trading. And the difference is that in regular hours, you have all types of traders now competing. So in pre-market, there are certain things that, or certain traders that are not actively in there. You don't have the same liquidity providers in there. You don't have the same rules in a pre-market as you do in the regular trading hours. In regular trading hours now you have institutions, VWAP orders, time WAP order, all this is going on there during regular trading hours. So here we see that there was an uptick in the dollar value of trades by 10%. All right, but then within the regular trading hours, we could also slice and dice it, because we know that depending on the time of day, the volume and the participation varies. All right, and I'm going to open this up, and here's how we could see it. We took it the first hour. It could be the first half hour, first 15 minutes, but right here we took the first hour of trading. And the first hour of trading will, usually start the day reacting to any type of, events or news that happen overnight. And that's where things start kicking in. And the first hour of trading usually has more volume than the next hour of trading or afterwards until the last hour. So the middle of the day, you see volume coming in. So here we see that in the first hour of trading, just kind of consistent with the regular hours, that's up 10%. Midday, that's including everything, all the time that it excludes the first hour and second hour or the last hour of trading. Here we're up 8%. Then the last hour of trading is up 12%. And the last hour of trading is a little bit different because now traders and institutions,